Welcome, everyone, to the ESG Decoded podcast. My name is Amanda Hsieh. I'm one of your co-hosts today, and today I'm delighted to have Shari Littan and Jeff Thomson from the IMA with me, the Institute of Management Accountants. Jeff spent 15 years leading the IMA and recently retired. The IMA is a global organization for accounting and finance professionals, and under his leadership, he grew its membership, doubling it and doubling the number of professionals holding the Certified Management Accountant CMA certification. Jeff is the author of many articles and books and has represented IMA on numerous with collaborations with numerous organizations, including COSO, which is going to be the subject of our podcast today. And a little bit about Shari. Shari Littan is a returning guest on the ESG Decoded podcast. Her day job, though, is the Director of Corporate Reporting, Research, and Policy at the IMA. She is an expert and innovator on mainstream accounting, corporate reporting, securities and corporate law, and business sustainability. And with that expertise, she leads the organization's thought leadership efforts. And if you're looking for Shari's previous episode where she talks about sustainable business management, it's episode number 75 that was released in January of 2023. Anyways, Jeff, Shari, welcome to the podcast. Thank you for making time in your busy days.
Pleasure to be here, Amanda. Thank you.
Thank you. It's great to be here.
Shari, would you mind telling us, for listeners who aren't familiar with the IMA, just a brief overview of the organization?
Sure. So the IMA originally was US-based. It's historically associated with the subdisciplines of accounting, of managerial or cost accounting. Today, though, we tend to use the phrase accounting and finance professionals in business. So we take primarily our constituencies are, as I say, in business, the controller, CFO, but it's expanded. And I think the one thing that keeps our substantively, the common denominator is our competency framework, which addresses reporting and control, some of which we'll talk about today, but also addresses other skill sets that are needed for that in-house role. Technology, leadership, ethics is always at the core of the profession, strategy. So all these things go for, as Jeff had mentioned, our core certification, the CMA, and it's the kind of the glue that keeps everyone together is thinking about the profession in that broader way. We were originally US-based, but now we are global in many, many countries. I couldn't give you the right number at the moment, but we do have prominence in Asia, in India, Middle East, Southeast Asia, Europe. Forgive me if I've forgotten a chapter or a location, but yeah, it's been a great experience. Thanks.
Thanks, Shari. What we wanted to explore today are the new supplemental guidance from COSO about effective internal controls over sustainability reporting. I think that whether you're a CFO, you're head of chief accounting officer, you're responsible for ESG reporting at your company, it's such a timely topic as investors, stakeholders are looking for trusted, credible climate information, climate disclosures from companies. But I want to kind of back it up and take it from the start. And maybe, Jeff, I can ask you to give us a primer, an education on the COSO principles.
Sure. So COSO is the Committee of Sponsoring Organizations of the Treadway Commission. So what does that mouthful mean? So in short, COSO was formed in the mid to late 1980s, essentially by an act of Congress. They formed this Treadway Commission, and they asked 5 largely U.S. accounting associations at the time to help develop guidance and thought leadership on issues facing the profession in internal control. The issue from a market and societal perspective were scandals, U.S. savings and loan scandals and frauds. And so essentially, I mean, there's more to the story than this, but essentially, the United States Congress asked the Institute of Management Accountants, the Institute of Internal Auditors, the Financial Executives International, the American Accounting Association, and I think AICPA is the fifth one. It actually asked those 5 associations to develop a framework, an internal control framework, not for just finance and accounting purposes, but for management purposes, for building trust and confidence and high standards, prevent frauds in financial reporting. And so in 1992, COSO released its iconic and landmark framework called ICIF, Internal Control Integrated Framework. That subsequently, fast forward to Sarbanes-Oxley in the early 2000s. Sarbanes-Oxley legislation required a credible, authoritative framework, and that was COSO. So COSO today is used in 99.9% of U.S. publicly traded company filings to attest to Sarbanes-Oxley. And the framework, the supplemental guidance we're talking about today, Amanda and Shari, is of course guidance specific to sustainability reporting, but it uses the same foundational integrated framework to build that trust and confidence. Amanda, you said it earlier, trust in sustainability data, climate, biodiversity, is really, really low. A lot of greenwashing, a lot of concerns with reported data. And as we move forward in the environment of more reporting and more compliance, we have to make sure those disclosures add value and integrate with other business needs. One final thought is, back in the mid to late 1980s, when COSO created these guidance from these 5 organizations, largely the 5 organizations I mentioned were US-based. Probably 90% of the operations were US-based. And it probably was a little bit accounting and compliance-centric. However, fast forward to today, the 5 sponsoring organizations of COSO are global, are interdisciplinary, connected to the entire value and supply chain. And I think that makes this supplemental guidance even more important, not only in building trust and confidence in the data, but in helping to create long-term value for organizations.
Something I think about that's pending in the United States, at least, is the SEC pending climate disclosure. And I could see how important having this framework established, or these principles established, whenever that it's been a proposal, and we'll see whenever they come out with their final rules. But I think I can understand how fundamental this could be for that, or if companies are operating in other jurisdictions in other parts of the world where there's already disclosure requirements, and or maybe perhaps if there's already a carbon price. Everyone wants to make sure they're accounting properly for their greenhouse gas emissions. Shari, you're nodding in agreement. Tell us more what you're thinking.
So just a few things. One thing that this publication does, as you say, Amanda, it's a roadmap for those who are coming from the sustainable business side and those coming from the corporate accounting controller function, having to have a conversation, and others within a company. We are seeing the emergence of a new role, ESG controller or sustainability controller. There's no actual home yet for that function or where that person or unit should sit, but the need is existing. A few things about the SEC versus there is so much attention even now on what to report. What should we report under SEC, 10K? What filing should we put it in? CSRD in Europe, ISSB, just so much on the what. And now we have natural capital, all kinds of, and we can keep saying disclose more, but how good is it? And how do we do this? By companies that are bewildered. They have staff in accounting, finance, sustainability, and the like that feel overloaded even now. They're not sure about the implementation. And greenwashing is a huge concern. You know, the people who are passionate about this area, we want to get it right. Yes, I say this whenever I speak on this, how we want to get it right. And so claims about greenwashing, bad information, things you can't count on. You know, one of the other things that I mentioned is we look to the younger generation to bring them in. Oh, my goodness. As I said, I just went to the AAA, a different organization, mostly professors. And what they're saying is this is engaging the next generation in accountancy because they find it meaningful, a purposeful profession. But that means if we're going to keep them and engage them in this talent shortage, it has to be reliable and trustworthy. So we can put out information, but we can put out good information, as Jeff says, for decision making. And information is costly. Information, you need talented people, you need systems. And so, like I say, we do want to get it right.
What are the main guiding principles that we should be aware of?
So probably whether it's a principle or a philosophy or just the nature of COSO, that integration point, Shari makes this point as well, and every time I interface with her, so I'm sure we'll talk more about this. But the nature of business today, actually, the challenges of today actually require as much alignment, integration, connectivity as humanly possible. And so that first word is so important, that it's an integrated control framework, right? Internal control integrated framework. The notion that that internal control sits off on the side, you know, let the accounting and finance people kind of take care of that, and we'll take care of running the business, and you know, the science of ESG, the transitionary plans into new innovative technology, that'll kind of go its own way. No, the whole idea of COSO from 1992, when the financial reporting or the internal control framework was first developed for the financial reporting concerns, was integration. And that is absolutely critical in an environment where interconnection and alignment between finance, accounting, those in environmental sciences, those in product groups, et cetera, is absolutely critical. And then, you know, when you add in scope 3, you know, where upstream and downstream partners need to credibly measure and report on carbon emissions so that the totality is understood by investors and other stakeholders. Wow, that really raises the game. So internal control integrated framework for financial reporting is 5 components, including control environment and risk assessment, et cetera. 17 principles and 87 maybe points of focus that are very application and insight driven. Well, guess what? That same framework, that same integrated structure is what will drive trustworthy, high quality sustainability reporting information. They're at the same level. They work together to create decision-making capability for investors and for other stakeholders. So the bottom line is that the framework is credible, it's practical, it's scalable, and together with you know, other tools and business processes, it will help certainly the assurance process, both internal and external. It'll give management and the board much more capability to build in capacity and capability. And finally, you know, Shari also eloquently talks about the what and the how. The what I think is pretty well understood. The SEC and the ISSB and national regulators around the world will take care of what they wanted reported. But as just one small example, in the new international standards that were the inaugural standards that were released, the what on climate and general disclosures is all laid out. But they actually are saying the expectation is that management is working on the how, like building resilience, building scenario planning capabilities, building milestone tracking capabilities on carbon emissions. Wow, there's a lot to do there. And I think COSO does its part in the internal control, risk management, all driving to long-term value. This is actually all about long-term value, not just counting and reporting and complying, and then kind of moving on to the next challenge.
Shari, did you want to add to that?
Yeah, so I would love to add. Thank you. So here's what I listened. First, the internal control, sometimes I don't even like the word internal control. Jeff has heard me say this. For those who are not in the accounting or have an accounting background or education, doesn't sound like a friendly word, right? So a better word for those outside of the discipline, traditional accounting and finance discipline, could be process oversight, system. That's a better word, saying, oh, we need good systems. Because if you want good information, the system has to be good. Now, this particular framework, the COSO internal control framework, became associated with Sarbanes-Oxley because when Sarbanes-Oxley was enacted in the US, and Sarbanes-Oxley said, please look at your systems, controls, and governance over what you're reporting to the market, that became, everyone said, well, we need a standard to measure, to say, how are we doing this properly? So COSO became the gold standard and became very much associated with financial reporting, regulatory reporting. But as Jeff says, when I do presentations or I speak on this, I say, well, it's really more integrated, enterprise-wide, holistic, because good information comes from a company that is considering all of its objectives and purposes and what they're going about doing throughout the organization. So good reporting rests on, good activities, right? It has to reflect the actual activities, and that's really the goal. So another thing that I hear from Jeff's remarks is leverage, in that this is something we do know how to do. Our profession knows how to do, and we can explain it and we can implement it, and we bring that expertise to the table with those in other departments because the entire company or organization wants to be more sustainable, bring sustainable business in. That talks about purpose, objectives. I always say this, and Jeff knows that. I say, when I was first, joined onto the project to create this publication, I said, okay, internal controls and sustainability. These two things, just the reaction is that they don't sound like they go together. But the truth is that when an organization or a company defines its purpose, why it exists, why should all of the stakeholders contribute their resources? Well, it's toward a common goal, a common enterprise. And we want to do that in a way that's responsible to the world and all the stakeholders, including the commons that are contributing. They have expectations, and we want to meet those expectations. And so we come back to fulfilling that purpose, fulfilling those objectives, including sustainable business objectives, which we use throughout the COSO guidance and publication.
I want to ask, what are the main questions you're getting either from your members in the kind of accounting finance world or perhaps ESG practitioners around the new supplemental guidance?
So I get the question a lot is, number one, where do I start? This seems so overwhelming. And then I go back to the word leverage. I say, you know what? A good amount of what needs to be done here, we already know how to do. There are some differences between traditional accounting and finance and sustainable business. And we need to use the tools that we have to adapt long-term estimation, measurement, a lot of things we don't know how to measure yet. So there are differences, but a good word that I use is leverage, and look at what a company or business is already doing. You know, they're already contributing or doing things well. So that is a key answer. So that's what I typically answer is
Thank you.
leverage.
It makes perfect sense to me to already. There are existing processes in place. There are existing systems in place, perhaps used, let's say, to account for a different item.
It goes back to know-how, Amanda, right? That's where we started. We talked about our competency framework, right? You bring your competencies, you bring what you know, and you try to use what you know for change. There are other challenges around resources and how we get corporate internal resources to actually do these things. Talent resources is a huge issue. Where am I going to find the people to bring about all these changes within my company?
Hopefully, as we move more aggressively forward on a kind of a holistic way of managing and transitioning and innovating around sustainable business management, hopefully we'll excite millennials, we'll excite students. That together with the infusion of technology and analytics into our profession, part of the competency framework, hopefully this will truly have a multi-stakeholder benefit, investors, customers, employees, current and future. Likewise on questions, we do hear a lot about assurance, right? Of course, in Sarbanes-Oxley, there's an expectation, or not an expectation, you have to assert with legal implications and other implications that you've achieved reasonable assurance and effective system of internal controls over financial reporting. And so in terms of leverage, we're trying to leverage those concepts, the expertise, add in business context on what the world of ESG and sustainable business management is all about. The assurance, I believe there were assurance standards issued an exposure draft August 2nd. So the International, Sherry, make sure I get this right, the International Audit and Assurance Standards Board. Okay. The International Audit and Assurance Standards Board, IAASB, on August 2nd, released an exposure draft on assurance standards, right? That I believe the comment period is through December. So that's another important connection point, because the expectation is that, again, with the assumption that we want sustainable business information integrated and aligned and at the same level of quality as financial data, because the two go hand in hand, the expectation is that organizations ultimately will achieve reasonable assurance over their sustainability reporting, not just today's limited assurance. And that's going to take a lot of improvement in measurement, in modeling, in sourcing, and statistical process. I mean, you name it. By the way, I saw that in India, their equivalent of the Securities and Exchange Commission is actually requiring reasonable assurance for the top 150 countries starting next year. So they're not even, as we understand it, putting in like a 2-year glide path, which is expected, although we need to see what the final SEC rule is. So, there's this is all about the quality and trustworthiness of the data. That's why when Sherry and I were, conceiving this project, we said we got to get the title right. It's not about COSO. It's not even about internal control as a means to an end. Right, and that end is trust and confidence in this critical data.
Right.
That's going to keep organizations reputable and creating long-term value for many stakeholders.
Yeah. So here's an example, Amanda, that Jeff is kind of suggesting. But we're hearing all about scope 3, right? Or even scope 2, if you trust you. But in order to report on different boundaries. So in financial accounting, we know what a consolidated entity is. We have rules from IFRS, US GAAP that tell us, okay, this is the total. These are the affiliates you need to think about, your investees that are part of your organization, consolidate. When you get to sustainability accounting and reporting, and you're talking about scope 3, you're talking about including and reporting on data that isn't yours. Because sometimes they say, what's the carbon footprint of an iPhone or a car or some other? It's the totality of the carbon footprint of all those inputs. And so you have to say, well, I got the carbon footprint information from my supplier. Well, how do I know if that's any good? And there are folks that are in traditional internal audit, accounting, and finance. They say, I'm going to take responsibility now for including and passing on. Now, what if I pass on data to my customer that's a public company and that information is not so good? And then there's assurance on top of that. And so, we have a legal system in the States that's different elsewhere, but you can even see the trustworthiness. Can I include a report on that third-party data question? It's huge. It's a core part of this. A second question that comes up a lot is that estimation that we talked about before. Inherently, sustainability is about the future. I know a storm is going to hit my portfolio of mortgages in Florida. I don't know if it's going to be in 2 years or 10 years or 15 years in my horizon. So the length of time of that estimation affects what I report, right? Scenario, Jeff talked about, they want scenario analysis. Well, how do I know if that's any good? So we know how to do estimation and measurement, right? Companies are doing that all the time, but are they doing it to a way that suffices that they could report on it externally and keep everyone happy and that it's trustworthy? So these are just a few. You can see that there are differences and that we do need to build, as Jeff said, those processes, those oversight, the control, the systems, so that the information that we are distributing is reliable for decision making.
You mentioned capacity building. So I want to direct our listeners who want more information to resources. Of course, we'll put the link to the updated guidance so that anyone who wants to read can read that executive summary and the guidance itself. Are there some other resources where you could guide listeners towards is IMA providing anything? I'm sure it's providing to members, but anything public as well?
So I'm happy to say, we talked about, it's so funny when we talk about COSO, because when I went to school, without getting into age and timeline, COSO did not exist when I was studying, or COSO didn't exist. Sustainability didn't exist. So I am a big believer in executive education, and IMA is going to be hosting this fall. In November, December, we just agreed with one of the universities in New York, Fordham University, to deliver executive ed workshops on this publication. So it'll be a deep dive.
Jeff, Shari, thank you so much. Shari, thank you for coming back on our podcast and introducing this, kind of giving our listeners so they can understand the importance of this. Obviously, people aren't going to want to deep dive into this now, but I think there's the fundamental principles, right, of internal controls, of having that trusted data that we can really make decisions off of is so important. So thank you so much.